right, let's get into our weekly segment, Business Chat. Just before we set the tone, let's begin with a quick look at this very important story where the country has been having the claims that there aren't enough dollars. Well, National Treasury Principal Secretary Dr. Julius Moya has told manufacturers to tone down their sentiments on the dollar shortage to avoid creating an artificial shortage in the market. Well, the Kenya Association of Manufacturers have in the last 1 month argued that importers are struggling to import raw materials because they can't access the dollars at the official rate of about 117 shillings per dollar, forcing them to buy at a rate of 120 shillings or even higher. But the Central Bank of Kenya insists there is sufficient foreign currency to meet the demand.
We have over 5 months a cover of imports. If you look at the Central Bank statistics and you look at our reserves that are held by the Central Bank, and so there shouldn't be a problem in terms of the availability of hard currency. Now, sometimes it is just sentiment that causes a problem. That is what I told manufacturers yesterday. I told them if they then start working on the premise that there's a shortage of dollars and they start accumulating hard currency, then they create a situation where they are more than accumulating than they need, and that creates an artificial shortage, which is not which is not reflecting the reality on the ground. And so I still maintain that we have got sufficient foreign reserves, about 5 months cover of imports, and therefore in terms of the foreign currency availability, that should not be a problem if sentiment was in the right way.
All right, let me now engage our resident analysts. We have Ken Gishinga, thanks for making time, and Wohoro Ndoho, always a pleasure having you gentlemen. Today, unfortunately, we won't be having Ramogi, but we hope he'll be with us come next week. Well, Wohoro, an interesting week it has been. We've seen a manifesto being launched, the CBK also maintaining we have enough dollars, and the country also raised the debt ceiling from 9 to 10 trillion. What's your key messaging, especially on this issue of the dollars? Because we saw one of the companies down in Kilifi just shutting operations because they can't buy raw materials.
I suppose in a free market like this, it's not just a free market of commerce, it's also a free market of information. And so the extent to which this issue concern is raised more and more, I think it behooves us as leaders to tackle this thing head on. So clearly there is a problem with the supply of dollars. The fact that a major producer of cooking oil, funny oil, had to basically stop operations is it's almost like a canary in a coal mine. It says there's something wrong, something's happening and something needs to be done. And so my own view is that this time round, as you go through the economic challenges, the government will find itself in a very different environment, in that it's better to just say upfront there's a challenge and how can we together fix the shortage. And so to me there's certainly something. I know we've said that in some markets the dollar is selling for 120. I do know for a fact that someone has, a couple of people who are happy to pay 130.
Yeah.
So I'd say by this time next year it could easily be 250 if something drastic isn't happening. So there's a lot of things coming to in some ways, some chickens coming home to roost, but also the combination of exogenous factors is such that it has made it almost impossible for the country to go on as normal, because it's not business as usual. The whole globe has changed. I think we need to change with it.
Gishinga, listening to the PS is saying we have sufficient stocks to run us close to 5 months, and literally we are seeing a different narrative altogether on the manufacturers. But let's talk about what does this impact mean to the common mwananchi. At the same time, what are the tools at the disposal of the regulator, being CBK?
Well, I think on this one, I'm on the side of the CBK and the Treasury. There's only one indicator of how much dollars a country has, and that's the reserves. It's not something that you debate about. And we have 5 months of import cover, actually 4.9. So we do have the reserves. I think what the central bank is concerned about is pent-up demand. COVID is ending and a lot of businesses are coming back to life. So the demand, if unchecked, can lead to the sliding of the currency and can lead to imported inflation, which will come back again and start complaining about the inflation. So the central bank, in my opinion, is acting prudently. When manufacturers who have been making most of the noise, none of them has talked about their business model. If you look at Pwani Oil and compare it to Bidco supply chain has a lot of local components.
Yes.
And it sources from Kenya, from Tanzania, and it's in the worst case scenario, Rwanda, so it doesn't have to collapse. But if you look at Pwani Oil, the supply chain is so concentrated towards Malaysia that it's being affected. So I think the challenge is really with the manufacturers. We have such an importation culture in this country that manufacturers don't think, how can we start invoking our local mechanisms, so in the event that global supply chains are disrupted, we can tilt forward. And that's, I think, the difference between Bidco and Pwani Oil is business model. So I think the CBK governor is spot on. They need to throw the challenge back to manufacturers and say, yes, we can negotiate to you in the short run, but in the long run, guys, will you guys be importing forever? We have factors of production in Kenya. Can we utilize these things?
All right.
True. That may be true, but we've got a structural problem with the economy. The fact is that we are completely import-dependent economy.
Yes.
And the extent to that, that's true. I'm saying chickens have come home to roost is that the majority of our manufacturers, the majority of what we call a substantive base, industrial base, is still import-driven. And so the fact that on the one hand you can count on the import cover, the reality is also the velocity of that money coming into the economy is changing. So as we are rising, on the one hand, the central bank has to be prudent in the stock it has. But if the demand has gone beyond a point where it can supply it, then you have to start thinking what other ways are there to open the market. The idea of import substitution is one that will work well. But that's a long-term thing. And say Pwani may be fully dependent on exports, but then on imports, but they're not the only ones. The majority of our imports of our manufacturing base is still very much dependent on borrowing, importing from outside. So that demand is going to be there for a while. My question is, if this is a first sign, what would be the solution to it? And it can't be saying that there isn't a problem. True, the demand is high, but clearly you have a capacity issue of supplying those dollars. And then what will happen is we'll have to go back to asking foreign banks to come in and bail us out. In some ways, it's a policy. It's a bigger policy question right here. Yeah.
And before I lose my train of thought, Gishinga had raised something very pertinent that CBK should continue with its stance as is. But could there be an indication for banks to have hoarded the dollar? Because it's like it's being rationed as we speak in regards to some of the spot checks we've been able to do by just talking to people in the industry. They're saying when you go to a bank, if you want $1 million, you're told we can only give you a certain number. Come for the balance another day. What does that indicate in your view?
I think you're absolutely spot on, Abi. When there is that sentiment that there is a shortage, that artificial, and that's what the PS is trying to address, that when there's that talk of an artificial shortage, people end up starting to hoard. Then you create a real shortage because nobody is releasing. And in the principle of forward guidance, it's really about words move markets. And I think what the governor and the PS are trying to say is, let's be prudent with the words we use, because lack of prudence in how we articulate things will lead this market into very dark situations. So I think there's need for the manufacturers to tone down, to negotiate with their bankers, how can they get these dollars, but in the long term to think of how can they start moving their business models in towards making them more locally sustainable. So I think there's a short-term solution. They do need those dollars. CBK needs to avail them, but the long-term solution is we must bring to an end this importation culture that we have in this country.
Ohoro, your thoughts? I could see you itching to respond.
Yes, I think, well, I don't think it's so much we're disagreeing as approaching from a different perspective. You know, there's a context to this, and the context is the international environment has changed. You know, we've also been through COVID, been shut down for 2 years. Yeah. Yes, manufacture is going to rise, but that should have been anticipated. And the reality is, you know, with the US Treasury also raising interest rates, it means actually the sourcing of dollars is going to be much lower. Mm-hmm. Because you're no longer, you had easy money, quantitative easing was basically American government printing money and sending us to us in Eurobonds. Mm-hmm. But now the US Treasury has raised interest rates. It means that all that supply of dollars is going to move away from emerging markets. That's the reality now. So what we're seeing this is, maybe it's the first signs of saying, okay, something structural needs to change. And among things, yes, import substitution, but others have to ask ourselves, what are we already doing, not import substitution, importing from outside. What we need to now grow is import substitution. Mm-hmm. And to the extent to which that is not happening, there's this phase through which the first industry has made some noise about dollar shortage. Mm-hmm. It's time I would much rather, for example, the central bank said, okay, here, flood the market with dollars. These are the first sign of that sort of complaint. Mm-hmm. Because what it does, it addresses market sentiment, which is what now he says will drive people now actually beginning to panic. A balance somewhere in there.
All right, interesting. And Wahoro, looking at this very important discussion, of course, the next administration has its work well cut out. We did see a very revolutionary kind of a manifesto being launched in the Azimiya presidential candidate. We are still waiting for Kenya Kwanza as well as the other candidates. But I just want to hear your view in regards to this hot potato, the Mitumba question, which is linked to the dollar still, because when these traders import their Mitumba, they pay in dollars. And I'd like to just pick your mind on what's your overall view? Was it a populist kind of manifesto? Was it addressing the needs of Wanjiku on the ground?
All manifestos are populist. By definition, they have to be populist. Otherwise, they're not going to get elected. Yeah. Mitumba to me is a classic sector to this dilemma we have. We have gone for so long to be depending on wearing other people's second-hand clothes, and even that's all foreign based, that any hint at substituting away from that is going to create some pushback. And so in a sense, the manifesto is right that yes, we do need to build our own local. And we are borrowing the idea from Rwanda. Rwanda did exactly that. And in fact, if you remember a couple of years ago, the American government came down quite hard on Bwana Kagame when he refused to allow Mitumbas. But now, 2-3 years down the road, their system is thriving. And I think we are learning from our brothers that there's actually an alternative. Yes, there'll be short-term pain in the transition. But to me, that's far more sustainable because you don't just grow the clothes, you grow the skill base upon which then, I would dare say that Rwanda is probably far more ready to become a center for manufacturing clothes, garments now, because they've been growing that base for now. Right. So it's going to be hot, but I suspect this is going to be some short-term pain to transition. But one, I think, absolutely agree that needs to happen. Yes, importing, I mean, I'm always embarrassed when I have visitors and you driving by the road and even people's underwears are being displayed on the roadside. And you think, this, we can't normalize this insanity, for example. Yeah. I'm giving an extreme example. I get it. But you can't normalize that. When was the last time you saw anyone putting together anything? Yes. The other by the new Mitumba, all of us have some Mitumba, Yes. Now this jacket, affordability also. This jacket, for example, this is 17,000 bob. And also a similar one for 2,000 bob. Yes. Now, why is that debate there? Who's going to debate 17,000 versus 2,000? Mitumba will be in every time. Yeah. But suppose that 17,000 was all based on local people building it. That all that 17,000 would have gone locally, but we import it. Yeah. Even our clothes we import it. Even second-hand, we even import our second-hand clothes. There's an issue here.
And there's no dignity in this. None. To have a really second-hand driven economy. But looking at the bigger picture, Gishinga, it's not a small sector. It's employing close to 2 million people as we speak. And wiping away all these jobs at a go, is a big crisis. It will leave not only pain, but erode people's livelihoods, because we've not set the ground running to have a thriving cotton farming, cottage industry. I know the greeneries are still there, but we still need to go prepare the farms, get the right seed, harvest, and do all those value chain related issues. Is it a practical proposition by this candidate?
No, it's not a practical proposition, and you've correctly said it very well. The mitumba industry has been there for a good 30 years. It puts food on people's tables, it pays the school fees for a lot of children going to school. Even the underwears that Wahori is complaining about, there's a demand for those. Yes. You know, there's a principle in economics. The says law, JB says, that says you only supply goods where there is a demand. So I think the big challenge we need to ask ourselves is, how have we let our country be such a low-income country? How have we allowed ourselves to wallow into poverty, into a country of debt, that the only thing that we can afford we'd all want to have the 17,000 shilling blazer, but how have we allowed our economy to produce so much poverty that people have to look for goods less than 1,000 shillings? I think that's the fundamental point. Once you solve the issue of prosperity, nobody would want to go to these mitumbas. You know, everybody wants to have first-hand garment. But the fact that our monetary policy, our fiscal policies, our debt structures have driven this country into so much poverty, unemployment, there is no other exit for those people. What can they wear? If you earn, the minimum wage today is about 13,000 shillings. If you remove your rent there and your transport and your food, what are you left for garments? So I think the fundamental thing we need to ask is, how did we move away from the path of prosperity? And how do we return? And that's what we're expecting from the manifestos, to take this country into prosperity, an economy that creates jobs, so people have incomes and they can afford that wonderful blazer that you're wearing.
I can confirm this is not 17,000. It's bordering somewhere near there. And gentlemen, very potent discussion, and we've run out of time, but this remains a very interesting week, especially now that we're seeing Kenya Kwanza also trying to put their house in order. They've been doing economic forums, and they're proposing that they'll be doing contracts with counties and committing to saying, we'll do this for this county, and they pen it down. I think that will be a good basis for our discussion come next week. All right.
Thank you.
Thank you, gentlemen. Well, we've been having that very interesting conversation on BizChat every Friday, where we dissect the key issues and the big stories that made headlines that week. Thank you to my panelists, Ken Gishinga, Ohorondo. Always a pleasure having them on the program. Well, we want to go on a quick commercial break. On the other side of the break, we have BBC Money Daily, as well as Captains of Industry. Today we are taking you to the coffee sector, where my colleague Brenda Kerubo will be speaking to one of the captains in that space. You don't want to miss that. Coming up right after the break.